Welcome back to the AI Daily Brief Headlines Edition, all the daily AI news you need in around 5 minutes. Today, once again, we have one of those days where a headline story is big enough that it probably could have been the main story, so it'll be fewer stories in the headlines with a little bit more detail. Basically, you're getting two main episodes in one. And of course, the kickoff headline story is that OpenAI's round has officially come together. It was basically exactly as it was reported, a $6.6 billion round in this case, leaving the company at a valuation of $157 billion. This means that the company has nearly doubled its valuation from its last round, which was less than a year ago. It's being called the largest venture capital deal in history, although of course $6.6 billion is less than the $10 billion that Microsoft invested, and it makes the company the third most valuable private company in the world behind only SpaceX and ByteDance. A couple interesting details that we learned in the reporting. As had previously been reported, the round was led by Thrive Capital, which invested $1.3 billion now through a pooled capital special purpose vehicle, but interestingly was also granted an option to invest a further $1 billion by the end of next year at the same valuation. That could look extremely smart if we see another similar valuation increase by the end of 2025. Microsoft topped up the $13 billion they've already invested with another $750 million, and other investors include Khosla, Tiger Global, Altimeter, Fidelity, Nvidia, and Cathie Wood's ARK. In a blog post, OpenAI said the new funding will allow us to double down on our leadership in frontier AI research, increase compute capacity, and continue building tools that help people solve hard problems. A couple of things that people are discussing around this. One common narrative is just how good Sam Altman is at fundraising, and that certainly seems to be the case. Further confirmation of that are reports that as part of the terms, OpenAI had explicitly asked investors not to make other investments in competitive companies. Among the companies that OpenAI said these investors were not allowed to invest in included Anthropic, xAI, former OpenAI co-founder Ilya Sutskever's Safe Superintelligence or SSI, as well as, interestingly, Perplexity and enterprise AI platform Glean. Writes Reuters, the request, while not legally binding, demonstrates how OpenAI is leveraging its appeal to secure exclusive commitments from its financial backers in a competitive field where access to capital is crucial. One source framed it like this to the Financial Times. Because the round was so oversubscribed, OpenAI said to people, we'll give you allocation, but we want you to be involved in a meaningful way in the business so you can't commit to our competitors. Another source who was a partner at a VC firm noted that the previous time that they've seen something like this was when Uber was dominant, adding, if a company holds all the cards, they can force people to do things unnaturally. Now, of course, one big point of conversation is whether OpenAI can possibly be worth this much. My general feeling, as I've expressed before on this show, is that if you are a foundation model investor and think that there's going to be a winner-take-all in the quest for AGI, broadly speaking, you tend to believe that the upside potential of the post-AGI winner is so uncapped that effectively any valuation is worth it. What's more, given that there are a very small handful of players who could plausibly reach that point, basically the set of companies that OpenAI asked people not to invest in plus Google, your options are really limited, and you kind of just have to pay what it costs to play the game. OpenAI is also clearly leaning into the business side of their company. They recently hired a new CFO, Sarah Fryer, who was previously brought into Square to help the company get ready for an IPO. The Information writes, since arriving at OpenAI as CFO in June, Fryer has polished a management presentation for investors to make it dead simple compared to earlier fundraising pitches from the company. The pitch hinges largely on mouth-watering comparisons that show OpenAI is one of tech's fastest-growing consumer products, with the fastest revenue growth in tech history, comparable only to the likes of Google and Facebook. Now here's the real juice. OpenAI is apparently forecasting in this deck revenues that would triple to $11.6 billion next year, and then double again to $25.6 billion by 2026. If those sort of numbers are even in the ballpark, obviously these valuations start to look a little less crazy. One final detail, after the announcement of the funding round, OpenAI told employees that it plans to allow them to get some liquidity through a tender offer. CFO Fryer wrote in a message to employees that the $6.6 billion round, quote, means that we have the ability to offer a tender event to give qualifying employees a liquidity option. This is, of course, important for employees who have been there for a while and who want to get some liquidity on their now extremely valuable stock, or I guess in this case, their extremely valuable profit units, but it also could mean that we see another wave of exits as people get liquidity and look on to new pastures. For now, though, that's the story from OpenAI. The round has been closed, and it is every bit as big as it seems like it was going to be. The one other story that I wanted to mention for this slightly main episode-y version of the headlines was a new deal between Nvidia and Accenture. Accenture is creating an Nvidia business group dedicated to helping clients use and scale GenAI tools. Lan Guan, the chief AI officer at Accenture, said in a briefing, we are living in the future we are envisioning, starting with our own company. We are reinventing this business. As part of the deal, Accenture plans to train around 30,000 employees for the new group. Accenture has, of course, been one of the big winners early on in the Gen AI transformation, having booked over $3 billion in business in their recently concluded fiscal year. VentureBeat writes, the new group will help clients lay the foundation for agentic AI functionality using Accenture's AI Refinery, which uses the full Nvidia AI stack, to advance such areas as process reinvention, AI-powered simulation, and sovereign AI. And indeed, it really feels like part of this is about getting out ahead of the coming wave of agentic AI applications. Indeed, Nvidia CEO Jensen Huang made it clear that this is all about getting ready for agents in the workplace. He said, we're seeing the beginning of the next and largest wave of AI, which is about companies around the world using AI to become more productive. Basically, we are moving from just the assistant or co-pilot version of the AI world to the digital employee or agent version of the AI world. More than anything else, this is just one more indication that that phase seems more than ever just on the horizon. For now, that is going to do it for today's AI Daily Brief Headlines edition. Next up, the main episode.